Alonso, which macro indicators are you watching most closely right now heading into 2026?
Greg, good to see you. So it's been a crazy year, very volatile year. We've had a lot of news, and hopefully as we look forward to 2026, we have a good setup for a great year. We're watching the Treasury curve and Treasury yields. I think super important. We just got out of the longest government shutdown in history, and we missed a lot of data. So for us, as we explore global markets or U.S. markets, we're really leaning on the Treasury curve and seeing where global capital is being allocated and making decisions based off of Treasury yields. Credit cards are linked to it, mortgage rates, auto loans. There's so many consumer products, loans that are linked to where the Treasury curve is and where Fed policy is. So that's probably our biggest piece of information that we're watching, specifically as we go into uncharted waters next year.
Well, you're watching rates, but for the most part of 2025, people are watching the Magnificent Seven and tech stocks. Will tech stocks win the day again in 2026?
Well, we think we're in the early innings of this AI, this tech revolution. Greg, if you look back a couple of years, we really questioned that 60-40 portfolio. We talked about 2022, where bonds were down, tech was down. It was a brutal year. But going forward, we think that tech momentum continues into next year. We would lean on earnings. Company earnings have been great so far. Development of products and services are still good. And so we're excited about some of these core holdings that we've owned for many, many years that we'll continue to own into the future.
Can I push back a little bit? Because a lot of people say that the tech sector is frothy. What's your response when people say, look, valuations are high, everyone's doing it, it's like the twist, and at some point it's going to break?
Well, we look underneath the hood and we look at earnings. Earnings are so resilient, and these companies that are continuing to produce from a total return standpoint are delivering on top line and bottom line as well. So when we think about it from a very simplistic standpoint, which companies are leading us into the future, which companies are bringing products and services to market that are useful for consumers like you and I.
So for someone who's watching rates, how do you mix watching fixed income investments with high growth stuff? How do you balance growth with defense?
Well, Greg, there's $8 trillion in money markets. And so what we're thinking as we go into next year is, where does that money go as the Fed continues to lower rates and those rates and that yield curve shifts lower? Investors have less appetite to invest in fixed income securities at low rates. So we're seeing that as maybe a conduit to bring some money to capital markets, whether it's technology, different sectors, private equity, venture capital, et cetera. We think 2026 is going to be an exciting year.
And then finally, aside from investing in equities and fixed income, you also do a lot of work in the sports industry and sports related industry. So that was a big theme in 2025, not just investing in teams, but NIL as well. You're a part of something called the Perseus Sports Group. What are you doing there, and what are your expectations for investing in sports in the coming year?
Well, Perseus Sports Group is a full-service concierge sports agency, and we're focused really on collegiate and high school athletes. Some of the challenges that we've seen and we talked about, Greg, is these high school athletes are getting checks for hundreds of thousands, if not millions of dollars, specifically at the college level. And so bringing some education, some financial literacy, and a team to these families and these athletes as they set themselves up for their college career and potentially their professional career as well has been really impactful.
All right. Well, thanks a lot for coming on and talking about it.
Good to see you.